Today we will look into the top 5 stocks that super investors bought last quarter. We can follow their portfolios on dataroma.com. Let's start with Alphabet. Google was purchased by 7 super investors in Q1 of 2024 and is currently held by 31 of them. I assume they were more active at the beginning of March when the price dropped below $140. I also increased my position in Google during that period, which proved to be a wise move as the price has surged over 30% since then. This drop was attributed to media pressure, as some sources speculated that Google would lose market share in their search business. This would have been devastating for them, considering they control more than 90% of search traffic, which translates to over 50% of their revenue. However, it became clear that there was a divergence between the dropping price and the company's fundamentals, so I saw it as an excellent opportunity to invest in a high-quality company at a discount. The second company we'll examine is Microsoft. It was acquired by 6 super investors and is currently held by 32 of them. Microsoft stands as the largest company globally, boasting strong diversification across 6 significant income streams, including cloud, gaming, AI, operating systems, and others. The stock price has risen by 12% year-to-date, reflecting the company's robust fundamentals. Before we proceed to the next company, I'd like to kindly ask you to take a moment to subscribe to my channel. Your support means a lot to me and helps me continue creating valuable content for you. Thank you. Third on our list is UnitedHealth Group. This is the largest healthcare provider and was purchased by 7 super investors last quarter and is currently owned by 16 of them. It also operates the 4th largest pharmacy chain in the United States. UnitedHealth Group is currently trading close to its all-time high, despite its recent report being affected by a cyber attack on one of its subsidiaries, Change Healthcare. I would like to take a moment to clarify that I am merely presenting publicly available information and not providing any financial advice. Number 4 on our list is Charter Communications. 6 super investors have invested in this company, and it is currently owned by 12 of them. I don't really understand these investments. If you examine Charter Communications' fundamentals, you'll notice that the company isn't experiencing organic revenue growth. Its significant jump occurred with the acquisition of Time Warner Cable in 2016, and it has since increased at a compounded rate of 5% over the last 5 years. The most concerning aspect is their debt, which currently stands at $97 billion compared to cash reserves of only $700 million. Their balance sheet mirrors those of other major communication and media companies like Verizon and AT&T. All these companies have experienced declines in recent years due to intense industry competition and the substantial debt they've accrued. I still can't comprehend why fund managers would invest in a company with a $40 billion market cap and $97 billion debt, especially in a high-interest rate environment. Perhaps they were enticed by the substantial drop of over 65% from its all-time high, but a deeper dive into the company's fundamentals suggests that this decline is justified. Last but not least is Apple. It was bought by 6 super investors, while it is owned by 16 of them. Apple has been struggling this year as the media is putting pressure on them due to the low growth in recent years. Indeed, we can see that their revenue has grown with only 8.5% compounded in the last 10 years. From another perspective, the company has been returning value to shareholders at a high pace, and they recently announced $110 billion of share buybacks. This is reflected in their earnings per share, which has been increasing at a compounded rate of 15% over the last 10 years. Let's compare the performance of the companies year-to-date. I removed Charter Communications as it has heavily negative returns, leaving the other 4 on the chart. You can see that Apple and UnitedHealth Group are more or less flat, with one slightly positive and the other slightly negative. Microsoft has seen reasonable gains of 12%, while Google has proven to be the best short-term investment this quarter, with gains of 27% year-to-date. Before we conclude the video with an update on my portfolio, Please take a moment to hit the like button and subscribe to the channel for more exciting updates in the future. As you can see, my portfolio continues to compound, and my temporary profit has risen to almost 3,700 euros. The biggest winners here are Microsoft and Google, but I've also made other good investments like Visa and Costco. If there's anything specific you want me to cover, please mention it in the comments. That's everything for today. See you next time.